let's talk a little bit about natural disaster because it's a big deal. And right now, even as we're doing this podcast, I know this is going to air a little bit later, but there's been a hurricane that has just come through Florida and then really came up through the Carolinas and caused a lot of flooding, a lot of damage. They're all dealing with that now. At what point are there going to be insurance companies who just say, we're not insuring Florida?
Yeah, so it's been an ongoing thing in Florida since 2020. They've been getting just walloped by hurricanes. I want to say after 2020 storm events, pretty quickly, it was like 7 or 8 carriers that were in Florida experienced insolvency. I believe now we're up to 31 total carriers local to the Florida, Georgia, Louisiana, and Alabama markets that have gone insolvent since 2020. So it's a big deal.
My name is Rodman Schley. As a real estate expert, I've invested millions of dollars in vacation properties all around the world, and I've been involved in the valuation of billions of dollars of properties. I want to share my 35 years of experience along with vacation home investment tips from the top minds in the short-term vacation rental industry. Now, let's do the work. Hey, everybody. Welcome to the Vacation Property Secrets Podcast. I'm your host, Rodman Schley, and you know, today's topic, it's not going to be the sexiest, but it's so important for short-term vacation owners, which is why we're fortunate to have Nick Massey, Director of Sales for Prosper Insurance. Prosper Insurance sole specialty is short-term vacation rental properties, which positions them as the industry go-to experts in managing risk for this asset class. With over 8 years at Prosper Insurance and over a decade in specialized insurance, Nick and his team have helped tens of thousands of hosts and managers with functional risk management strategies in all 50 states. Hey, Nick, welcome to the show.
Thanks for having me, Rodman. Excited to join you here and speak with your audience.
Yeah, it's going to be interesting today because we're going to talk about something that typically might be a little bit dry. And maybe it's dry, yes, but it's so important for short-term vacation rental owners to make sure that they are properly insured. So we're going to talk a little bit about insurance.
Yeah, it's not the most sexy topic in the short-term rental industry, but next to safety, it's, in my eyes, one of the most important, if not the most important. And talking about risk management, protecting these assets. We see all the crazy stuff. I've been doing this for almost a decade now with Proper, and I can tell some crazy stories if we wanted to get into that.
Yeah, and maybe we will. I think, you know, that's one of those things where it's like insurance, you don't really want to talk about insurance because you don't want to have to deal with insurance. You have to get it, but you don't want to deal with what could happen out of insurance. But the world's pretty crazy right now. We've got so many things happening in the world in terms of global warming, a lot of these natural disaster events that are happening. Insurance is more critical now than ever. But do you see that people are really taking insurance, I want to say seriously, but I know that that's kind of the last thing we want to pay for is insurance, right?
Yeah.
But are people taking the proper time to go in and figure out what they really need to do to make sure that they're covered?
Yeah, I mean, it's an easy question to answer one way or a loaded answer in the other regard. For the vast majority of the folks we talk to, whether they become a client or not, they generally are taking this risk management equation very seriously. For the general consumer, though, insurance has always been this heavy marketing of it's just something that you need, so try to find it as cheap as possible. And that might work in our everyday personal lives because a lot of that insurance product is very similar across the board. And it's kind of a race to the bottom on a premium equation. When we talk short-term rentals and midterm rentals as well, it's a very niche area in the real estate market, but it also comes with a bunch of new risks that you don't have in the standard residential or long-term rental market. So taking a deeper look, understanding the contract more, really understanding what you're paying for and the why behind it, getting a better sense and a higher level kind of education around insurance when you're having those conversations. We are seeing that quite a bit with the folks that we talk to, but there is a lot of folks out there who may have never even thought about this. And this would be the first time listening to me on your show. Really, I never even thought about insurance when I converted my home to a short-term rental or bought a property as a short-term rental and the risks that could be associated with it. So I really strongly feel that this part of your business needs to be something that you spend a good amount of time on and make sure you know and understand what you're getting, what is covered and what is not covered so that you can prepare if something happens.
Well, and Nick, a lot of people come in and start working on their cash flows to try to figure out what are going to be my expenses. And they start to get that insurance line. When they get to that insurance line, they think maybe in terms of their home. Okay, how much am I covering on my home and what's the cost on that? But is there a premium associated? You said right out of the gates that there's more risk associated with the short-term vacation rental. So anytime you think there might be a little bit more risk, you're thinking there might be a little bit more premium too. How does that work?
Yeah, I mean, fundamentally going back to the creation of transactional risk transfer, that's how Lloyd's of London describes it. I mean, they started in 1688 insuring merchant vessels that were sailing all across the New World, bringing goods back and forth. And so transactional risk transfer is the basis of the more risk that you transfer to an insurer, the more you're going to end up paying in premium. So you have high risk categories, yes, because you're in an area prone to natural disaster or you're in a high forest fire zone, things like that. But then you also have what is that carrier excluding versus what is that carrier covering. And a carrier that's going to provide more coverage, i.e. less self-insurance on your side, you're simply going to pay more in annual premium.
Yeah. And, when I think about insurance, when you're sitting down talking to an insurance agent or trying to figure out your insurance, I mean, the forms and the riders and everything else, I mean, they're lengthy. I mean, it's almost something that as just a regular person, it's hard to understand exactly what the coverages are going to be because, there's just so much in there. So it's kind of an overwhelming thing for people. What would you suggest to people in terms of when they're looking at their policies? What are some of the things that maybe they miss or some things that get excluded often that they should really be looking for when they're going through their policies?
Yeah, it really starts at the initial conversation. So I really don't want to dog on other folks in my industry, but no offense to anybody who's in insurance who's listening to this. But when you sell 10, 15, 20, 30 different products, you don't intimately know all 100 pages of all those contracts. So again, as consumers, what we've kind of been trained to do through the marketing is we get what's called a 2-page quote, very basic, simply shows limits of insurance, literally doesn't outline anything that's covered, doesn't show you the exclusions, doesn't show you anything. It's just, we're giving you X amount of limit at X amount of premium, click here to buy it. So it really kind of starts there, and then you're sent a full insurance policy and everybody just sticks that in a file cabinet or saves it on their desktop and never looks at it. So like one thing that we do that's quite different is we anticipate and hope everybody that reaches out to us expects a 30-minute plus conversation because we want to dive into the details of that contract and get into the nuts and bolts of what you're buying from us. One thing that we did in the development of the program was to make it unilateral across the entire country. So if you're a multi-state property investor and you're utilizing Proper for your risk management, you're getting the same policy in every state. The coverage does not change, which makes it really easy for you when you understand the contract and you have that initial consultation to move forward with other properties and know and understand all of the niche coverages that we've put in there, all the standard insurance language that's also there as well. So you're not second guessing yourself on, is this the same product or not? Because it is across the board. Whereas other companies might have different products in different states across the board. So you're never truly getting really the same thing. So I don't expect anybody to sit down and read 50 to 100 pages of insurance contract and understand it. One thing I tell everybody when I'm on the road at conferences or doing these podcasts like this is if you read your insurance the first time, you're going to fall asleep. It's incredibly boring. Read it a second time, you'll start to understand a little bit. Read it a third time, you'll probably understand or know more what's in that contract and the person that sold it to you.
Yeah, I can see that. I could totally see that because like you said, some people have so many products, it's hard to be intimate with any one of them. But what about the person? Do you see a lot of times that people are actually just getting a regular policy on a short-term vacation rental and then getting burned because they didn't have something that included coverage for the short-term vacation rental?
It's a daily phone call for my team and I. Folks tend to find us the hard way, which is you had a situation at your property, found out it's not covered or you weren't covered correctly, and then now you're paying out of pocket for the loss. And then they end up finding out that would have been covered with us because we've addressed that situation in our contract and made it part of the coverage. And then they, hopefully it never happens again, but if it does, now you know. So that's where I really get kind of to go back to what I was saying. You really want to spend the time and ask the hard questions, whether you're shopping through us or shopping through a local broker, and getting answers to those questions in writing. Like, if a guest vandalizes my home, am I covered? If there's bed bugs, am I covered? If there's this, if there's that, how is my income? How is my revenue protected during a covered cause of loss? And really getting the fundamentals and understanding of that. So if you do have a loss, you know what to expect, and you're not just kind of slapped in the face with a no because those weren't addressed on the front end before the purchase.
And when I'm hearing this, what I'm thinking is, well, that's why it's very important to be upfront with whoever you're getting insured with, that you are using it for a short-term vacation rental, so they understand, and again, like you said, there's a lot of people with a lot of different products. So number one, ask, or number two, make sure that the insurance agent, the person looking to cover the property, knows exactly what you're going to be doing, and then get somebody who understands that product too, understands the short-term vacation rental market, understands those risks that you want to try to mitigate.
Yeah, a big thing on that is the insurance agent that you're dealing with doesn't pay claims, right? So they're filling out a questionnaire on your behalf to send to an underwriter to review your risk. And unfortunately, and I'm just going to categorize the vast majority into what we call the retail market. Okay. And you can pick any top 10 name in the United States in their retail market. Now, in 2017, I believe it was 16 or 17, the Standardization Office for Insurance Forms came out with some enhancements that could be tacked onto the retail products, but they're not very comprehensive. They're actually extremely weak in coverage. But most of the questions, when you say my property is a rental and that's presented to an underwriter, it's under the assumption of a long-term rental, which isn't classified as a business activity in the insurance world. But a short-term rental and even a mid-term rental is. So a lot of these retail carriers haven't really come around the bend to the terminology in this space. So they don't have questions that can be answered around a short-term rental. Now, some of them do have these questions in the quoting process, and it's to flat deny your request for a quote because they want nothing to do with the risk of a short-term rental. So make sure you're using the right vernacular. You're not just saying that it's a rental, it's a short-term or a mid-term rental. I would also highly advise that you ask the agent to get answers from the underwriter to your questions. And if those answers are sufficient and they're in writing, you're going to hang on to those because if something happens and the claim is denied, you have something to fall back on in writing saying, no, you told me it was covered here and now you're denying the claim. Now, as a policyholder, you have necessary recourse if that situation ever arose. So I always get real kind of hesitant with clients who are looking at some other policies and that policy is attractive from a premium standpoint and go, look, you should really send the agent your online listing and ask for a reply from the underwriter that they've reviewed your property, how you advertise it, how you rent it, and that they're okay with that and that they're going to cover your property damage and liability arising from such activity.
Yeah. And as a business owner and a property owner, as an investor, you always want to pay as little as you can. I mean, you're shopping for the best premiums, but you've also got to take into consideration that risk and what's covered. And so sometimes we get fixated on price and such, but what about the premium? Are we looking at, when I say premium, I'm not just talking about an insurance premium, but a premium above and beyond what a typical home would be in terms of insuring? Is it significant? Is it, what should people go through the process and thinking through, how much is this going to cost me more than my typical home?
Yeah. So if we were talking 3 years ago, Rodman, I would say we're at the minimum 2x. But if you've kept any pin on the news, you've probably seen the headlines of insurance rates increasing. To kind of use Texas as an example, we had two major freezing events over the last couple of years throughout Texas in the wintertime. And the insurance rates in Texas with the retail market was just reported by the Insurance Information Institute that they have gone up in Texas alone as much as 60%. So the average home premium now in the United States is around $2,700 a year. Our average premium in the United States is around $3,900 a year.
Yeah.
So it's not a huge difference. Now, if we're talking coastal areas that are prone to hurricanes, that changes things. But on average throughout the United States, that's what we're looking at for kind of your standard 3-bedroom, 600,000 insured value for replacement cost, single family home across the United States. Yeah.
Yeah, let's talk a little bit about natural disaster, because it's a big deal. And right now, even as we're doing this podcast, I know this is going to air a little bit later, but there's been a hurricane that has just come through Florida and then really came up through the Carolinas and caused a lot of flooding, a lot of damage. They're all dealing with that now. Now another hurricane right on the backside of that one's coming up through Florida. At what point are there going to be insurance companies who just say, we're not insuring Florida?
Yeah, so it's been an ongoing thing in Florida since 2020. When they've been getting just walloped by hurricanes. We saw, I want to say after 2020 storm events, pretty quickly, it was like 7 or 8 carriers that were in Florida experienced insolvency. I believe now we're up to 31 total carriers local to the Florida, Georgia, Louisiana, and Alabama markets that have gone insolvent since 2020. So it's a big deal. I'm not going to shy away from the fact that, like here at Proper, we carry one of the most expensive wind rates when you include hurricane on a policy. Now, there's a couple factors behind that. One, you're buying more of a commercial product, so it's a commercial rating structure versus a residential rating structure. The second part of that is that we cover gross revenue. So we protect top dollar for revenue loss due to a covered claim. Now, to talk a little bit, because this message is very important to all those out there, and trust me, our hearts go out to those affected, especially in the mountain regions of North Carolina, because this is not something you're used to. In fact, we had a major flooding event 3 years ago out here in Montana from a very heavy snow late in the season. We're out here in Montana, we're prone to snow. We get so much snow, but it was really late in the season after a bunch of rains, and it wiped out parts of Yellowstone National Park. It cut off Immigrant, Montana. The roads on both sides were blocked off.
I remember that, actually.
Yeah, it was bad. And nobody here, we're in a mountain area, nobody here buys flood insurance. So here's the important concept everybody needs to know. There are 3 structural products for homes or businesses available in the United States. First is fire and liability. Now, that obviously covers way more than just fire. It's going to cover your vandalism, your theft, the broken water pipes, the roof damage, the hail, et cetera, and liability if somebody gets hurt and tries to sue you. Then you have earth movement, which is an earthquake policy. And in some parts of the country, you think up the Pacific coast, that is something a lot of folks try to desire. And then the third one is flood insurance. So flood is defined by the natural occurrence of rising water or protruding water or surging water to an area of 2 or more acres that is normally dry. And that is what is covered through the NFIP or FEMA. And there's some private flood carriers. And that's the situation we're in with Hurricane Helene, is that is a flooding event. Hurricane Harvey that hit Houston so hard. Houston they get storms, but they don't get that type of storm. That was a flooding type hurricane that pushed that tidal surge up. Katrina was a flooding type hurricane. Helene was a flooding type hurricane. And now Milton coming in, it has the potential to also be a flooding type hurricane. So anything that is damaged by tidal surge or the rising of water or a broken dam or a blocked up river, that is a flood event. And there is no fire damage or fire policy, let's call it, that is going to cover that. And that's the situation we're in right now. And it's truly heartbreaking, because everything we want to do on our side for our clients when it comes to a claim is say yes. We're in a very unique position with our company that we handle all of our claims in-house. We don't push that off to a third party. So there's been a lot of no conversations going on right now. And it's really difficult, and there's a lot of emotion and frustrations. And trust me, I totally understand it. But again, this is the fundamental thing that we talked about a minute ago about not having those conversations with your agent, fully understanding what you're covered for. So most people, in fact, only 2% of Americans have flood insurance. So usually flood insurance is required by a lender. Flood insurance is also very expensive. So for those in Florida, if you have it, that's your main point of recourse. And to kind of talk a little bit deeper, let's say you have the water line's at 3 feet in your home. Flood insurance generally covers the flood line plus 12 inches. And then anything above that mark that is damaged through flying debris, fire, maybe after the flood, you have the unfortunate vandalism. People come in and they're, damaging or stealing property. That would be covered by your regular home insurance policy. So it's a tough situation for those markets for sure. I highly encourage everybody who's in a coastal market or in an area that is even near a river or a lake or a dammed reservoir to look at procuring a flood insurance policy to protect yourself.
Hey, everybody. I hope you're enjoying this episode of the Vacation Property Seekers podcast. I want to let you know about one question that I get all the time, and that's how do I forecast my cash flow and my profitability when investing in a vacation home? Now, if you've ever wondered that or you know somebody who has, you're in the right place. We've created a free training called Financial Forecasting for Maximum Vacation Home Profitability. Now, in this training, we're going to guide you step by step on how to accurately project rental income, estimate your operating expenses, and calculate your returns so you can make informed investment decisions. You can access the free training at vacationpropertysecrets.com. So if you're ready to dive deeper into financial fundamentals and maximize your profitability, visit vacationpropertysecrets.com. Yeah. So if you think about those folks, who just experienced this devastation out in the Carolinas and think about what they had gone through, I mean, were those people unlikely in floodplains? It's probably a very, very rare event, and they probably were not even in a floodplain to consider taking on a flood policy.
Yeah, exactly. It's an area you just wouldn't buy flood insurance. It's, mountain streams and rivers that aren't usually something that would do that. I was looking at some history, and don't quote me on the dates, but I think it was 1910 or something like that. There was a similar event that happened in that same region that caused massive devastation as well. So it's not an area that's routinely prone to it. When you look at kind of the plains areas in Nebraska and some parts of Iowa and the Dakotas and stuff like that, when the mountain regions like Montana and Colorado and Utah have their annual runoff, it fills up those streams and it can start to flood those areas. So there's a lot of FEMA flood zones in those central states. Most of the mountain regions like Asheville and those areas of North Carolina just aren't in a flood zone. And so it's not really on anybody's radar. It's not a lender requirement in the area. So unlike a coastal Florida, like if you're right on the coast of Naples, Florida, if you have a mortgage, you're probably required to carry a flood insurance policy.
Yeah. So what happens to those poor folks in that situation? I mean, are they just out of luck? Are they going to have to just kind of walk away from their mortgages? I would think that would be a horrible situation to be in.
Yeah, I know there's, we don't need to get into any of the political landscape about FEMA and stuff like that, but that's typically the recourse FEMA disaster assistance. Fortunately, I think a lot of folks, especially those who are on the investment side of real estate and not the primary home side in that area, are going to have to look at an SBA disaster loan to cover. Some folks, may just walk away and sell. Might be where they have to go. But from my standpoint, from a insurer on the fire and liability side, there's just nothing I can do unless there's a tree damage, fire damage, vandalism damage, things like that.
Yeah, that's tough. Well, it seems to be like you've got, and a lot of people say, well, there's no global warming or this and that. I don't think there's really an argument if there's global warming. The globe is warming. It's a matter of who's doing it. Is it a natural occurrence, or are we? I think the argument is there. Who's doing it? Is it natural, or are we doing it? But it's still, we are still getting warmer. The oceans are getting warmer. The sea levels are rising. There's a lot of these things that are just changing. the earth has been changing for years and years and years anyway, whether it's getting colder or warmer. We're just happen to be getting warmer at this point. So what do you think the future looks like? Is there going to be a point where, like, if I want to buy that coastal home down in Florida, that I might not be able to even get insurance?
It could be. Could be. I've been saying for years, Florida, like California did with fire. California, as everybody knows, is extremely prone to wildfires. And as the urban expansion continues to push into those mountain areas, we see a lot more damage to property. So California came out with what was called the California Fair Plan for those folks who were unable to secure a fire policy. And we run into that too. There's certain areas in California that we decline risk due to forest fire, and those folks need to secure a California Fair Plan. But I think the coastal area, they tried to do it through a company called Citizens, and Citizens has some other offshoot companies as well that they own. And they're, for the longest time, have kind of been the go-to when it comes to supplemental wind and other coverages at a kind of better price point, if you will, but coverage is limited. Citizens has really got very particular about who they're going to cover and when they're going to cover and things like that. So I think one thing that the coastal areas may get into is a state-funded wind program like California did with the FAIR Plan. There hasn't really been any legislation on it. There hasn't been any talks on it, but that's just something that, I've kind of been talking about with my staff and at conferences and things. Is like the day is going to come eventually. Insurers are just going to eventually say no or charge such exorbitant premiums to cover that virtually nobody can afford it. And so I don't know, we'll see how that transpires. It's kind of like TRIA, the terrorism risk insurance that came into effect after 9/11. Nobody excluded really terrorism coverage in that realm until 9/11. So now nobody wants to cover it from a private insurer standpoint. So now it's a government-backed program.
Yeah. Nick, what are some of the things that, as a vacation property owner and investor, you should really be looking at to make sure that you have in your policy? What are some of the big things that people miss?
Liability is the biggest target for sure. And that's where I can get into some unique claim examples of just some crazy stuff that we see. And I don't think a lot of investors, they get into this mindset of, that'll never happen to me. But I can tell you from 10 years of experience, it very well could happen to you. You never know what somebody might be wanting or willing to try and sue you over. The second big one is, how is your income protected? I find that there's three types of mindsets in this space. There is, I need the income. I rely on the income. The income builds my portfolio. If I don't have the income, I'm more or less SOL. We have I just want the safety, security of knowing my expenses are paid. That's fine. And then we do definitely have the client who's like, I can float the property for 12 months. I don't really care about the income, but I still think it's an important thing to make sure you understand how that's responded to. The third one that we see a lot of folks come to us about is guest caused damage. And we're one of two companies in the United States who has no limit on malicious damage caused by a guest. A lot of policies have a dishonesty or property entrustment exclusion. And so when you hand those keys over to a paying guest and they throw a party or vandalize your home, you have now entrusted the home to their care for that duration of the short-term lease, and you don't have any coverage. So that's one thing, to be on the lookout for. And I think people also really undermine the amount of bed bug infestation claims that happen out there. And that's a coverage item that we put into our product back in 2018. And I've had since, and has been duplicated and replicated by some other carriers, but that's probably one of our top 5 claims that we file. Now, the number one claim in insurance is water damage. Now, not water damage from a flooding event like we just talked about, but frozen water pipes. Guest kicks a hole in the wall and damages that. They leave the tub running. The ice maker goes on the fritz and causes water damage. Because water damage is the number one claim in the U.S. for all insurers, what ends up happening is they're putting limitations on water damage payouts, or they're putting really high deductibles on water damage claims. And so that's another factor kind of into premium as well. If you were to ask why is proper that much more expensive, well, again, we have no sublimit on water damages in that regard. So we're going to pay the full course of the damage up to your policy limits, plus the full course of your lost revenue during that period of time for the restoration.
Yeah. It seems to me you talk a little bit about water too, and there's a fine line between where the water's coming from. And I know this, unfortunately, by experience. We were transitioning at this one point from a new house. We're going into a new house from an old house, and we went into this rental property. And you talk about water from the outside versus like a pipe breaking on the inside. And in this house downstairs, there was a sump pump, and the sump pump failed, and it took out a lot of our stuff. It took out our furniture. It took out a lot of our storage. And the insurance came back and said, well, we're not going to cover that, because if it were a broken pipe, you would have been covered. But being that it's water coming from the outside and it's a faulty sump pump, none of it's covered.
Yeah. It's so insurance is definitely nuanced in that sense. So you look at, like, if you're renting a home and you have a renter's insurance policy, the coverage is extremely limited, but that's why it only costs $10, $20 a month. Now, from a homeowner standpoint, you do have coverage additions that you can put in that would cover sump pump failure specifically. To use kind of a better example, let's say, the property was on a septic or city, it really doesn't matter. And there was some sort of blockage that caused a backup through the sump pump into the home. There's a coverage item that can be included on policies for backup sewers and drains. Now, unfortunately, it's typically limited to only about $5,000 or $10,000 now, because, again, water damage is the number one claim in the U.S. That's something we took very seriously in the last year and actually eliminated the backup sewers and drains sublimit. So again, a backup sewer and drain claim, we're going to cover up to your policy limits for your furnishings, the structural damage, and your lost business revenue. But yeah, that's where understanding and knowing your coverage, because if you're buying a cheap insurance policy, a backup claim like that may be declined because you're simply not paying for it. Kind of look at it this way. If your insurance agent for your auto calls you and says, hey, I saved you $10 a year on your insurance, you go, oh, that's great. And don't ask why. And then you find out that you don't have windshield coverage anymore. Well, that's where the $10 came from, right? So that's where a lot of folks, we like to do kind of in-depth analysis of your current policy. You can send us your full policy and we'll read it cover to back and send you a breakdown email. It says, hey, they're covering this to this limit. We're covering this to this limit. This is what they're charging. This is what we're charging. So have a review and then tell us how you would like to proceed. If you desire the additional coverages we bring to the table, then we'll help you get set up. If you don't, then everything that's in that policy because we sat here and broke it down for you. So more or less, that probably could have been the case, right? The landlord didn't have coverage for backup sewers and drains. And on your renter's insurance policy at that time, there's just almost never coverage for that.
Yeah. That was exactly what happened there. But everybody thinks nothing's ever going to happen. I mean, I think you said that earlier. We go into and go, insurance is a just in case, but the chances of something happening are minimal, or it's back of mind. But you've seen some stories too. You said you've seen some stuff happen. What are a couple of the craziest claims that you have seen?
So I was literally just saying this before I came into the podcast room here to get on this with you. And we got a notice of a claim yesterday for an unfortunate situation where a gentleman tore his scrotum on a toilet seat.
My gosh.
Don't know how, but probably a pretty strong probability of a lawsuit coming down the pipeline for that. So that's probably the most unique one. I say every day, this career never ceases to amaze me, what we see happen between guests and property owners. Now, we've seen some other crazy stuff. We had a situation in, I won't say where, mountain area out here in the West, family from the East Coast staying in a mountain cabin. They were out at night around the property with their children. There's bats here. They fly around. They got so scared that they may have gotten bitten by a bat that they had their kids and themselves go get rabies shots. Well, that was so traumatic to their children that they retained an attorney and sued the property owner and the property manager for not notifying them that there's bats in the area. So they sued for emotional distress and things like that. Had another one that I thought was kind of wild. But this goes into just how much you need to pay attention when you're in this space, because a lot of these short-term rental homes, the investors are buying a older home and then doing some renovations. When we do renovations, I think you pointed out well, we're always looking for a bottom line. So in some instances, a corner may be cut. In this particular case, they had renovated the entire house, but they didn't replace sliding glass doors to the new code that's required in that particular state. An 8-year-old kid was running through the home to jump into the pool. Now, the homeowner did such a good job, or their cleaning company did such a good job of cleaning said sliding glass door that they thought it was open.
Yeah.
And the kid ran through the glass and it wasn't tempered. So lacerations on the face and the leg. They sued, I believe it was $250,000, and they ended up getting that amount because the property owner in this case is negligent through the renovation of not adhering to the correct code in the area.
Which was probably the tempered glass, right?
Yeah. So the home was originally built in the 80s, and that code was updated, I want to say, in the early 2000s. And the home was actually, the gut renovation happened in 2018, but they didn't replace that. So those are things that, when you're trying to mitigate your risk, some of this risk mitigation is making sure you fully understand the current building codes in your area. Because one thing that we get a lot of confusion with our clients is handrails. So there not being presence of handrails or guardrails to building code, the international code, is one of the main target points for lawyers right now. And so we require, if you have 4 more risers or an elevated surface, typically above 28 inches, we're going to require a handrail and a guardrail. And we get a lot of kickback from clients on that. And they use this term called grandfathered. Well, you would be grandfathered into code from a residential standpoint, but when you're doing short-term rentals, you fall under a commercial code classification. So you need to be up to those codes. It's your responsibility as a property owner to provide a safe place for people to stay, and they should be under the assumption that you're doing that. And so by not doing these things, you can find yourself in a place of negligence, unfortunately. So we see a lot of those, and we're only as good at underwriting as what we can see. We had a very large situation where a gentleman fell off a cliff at a property, showed up at night, traveled by airplane, was drinking airport beers, they did have the toxicity report showed that alcohol was in the system at the time of the injury, but fell off a 30-foot cliff on the edge of the property. There was no illumination. There was no fencing. There was no signage, nothing to indicate that this gravel pathway that the property owner had put in was going to terminate at a 30-foot cliff into the lake. So,
yeah,
we see things like that. One thing I point out is we're competing with hotels in this space.
Mm-hmm.
Hotels are highly, highly standardized. You're going to get a consistent product at virtually any hotel brand that you stay at across the country and really across the world. Vacation rentals, every single property is inherently unique. And so every single property you need to look at individually. It's not a consistent product, and you need to go through these exercises. And that's one thing that we kind of promote too, is you're not just buying an insurance policy from us, you're also hiring a risk manager for your business. So we're going to go through and we're going to look at these things, and we're going to give you insights on what you need to do to help mitigate risk. And it's not to eliminate the risk, it's to provide us a level of defensibility should a lawsuit come to you. And really the general rule of thumb in the insurance world is if they don't underwrite for it, they probably don't cover it.
Nick, I can see the defense, and I can see, when they're going to court, I can see them going into court and talking about that door. I can see that being an issue and really having a good point. The bats, I don't know. I think they were kind of pushing it a little bit with the bats.
Mm-hmm.
But the guy with the scrotum, I don't know how you mitigate that risk. I mean, a toilet seat's a toilet seat. What could have the property owner done different to mitigate that ripped scrotum? I don't know.
Yeah, I don't know. Like I said, it literally was in the claim report I get every morning from the day before, which lately has mostly been Hurricane Helene. And then I saw bodily injury liability, and was like, I'm going to look and see what happened here. And then read the report and was like, oh, I'm not sure how that happens. But obviously something to kind of put out now for everyone to check, make sure your toilet seats aren't cracked or broken, because it could lead to a liability lawsuit, apparently.
Yeah, by the way, this is probably the first time we've ever talked about that. And I'm certainly sure that it's going to be the last time. So
More than likely.
it'll
Yeah.
probably never come up in this show
Yeah.
or conversation again.
One time in 10 years for me. So I don't suspect to ever see that again. But like I said, this job never ceases to amaze me on the type of things that we see come up.
Yeah. Well, Nick, like I said earlier, insurance is the last thing that we want to talk about, but it's a very important thing. So I really appreciate you coming on today. But before we let you go, I got a couple of things. Number one, I want people to be able to find you so they can learn more. If they want to have you take a look at that policy and do that read through to see what they might be missing or how you can just help them be a better steward and reduce their risk.
Yeah, so you can find us easily. It's just www.proper.insure. You can find Proper Insurance on all social channels. If you Google short-term rental insurance, we're probably the first one that pops up on your screen there. Very easy to find. Quoting your property is a zero commitment with us. It's just putting in some basic information so that we can, our team can touch base with you. You're assigned to an actual agent. That person is your person for the life of the insurance policy. We kind of run a fine line between new school tech and old school customer service in that regard. So that person, if you were to move forward with us, would be your dedicated risk manager. They're your liaison through underwriting. They're the one who's going to help guide you through some of those items that you might have to do. They're the ones that might also work with you on some creative solutions. You know, maybe you have 100 steps. I have a client who had a bunch of steps from their house down to a lake. They had to put in a handrail. It was going to be like $40,000 for a contractor to do it. And we ended up getting some approvals to do some nice cedar posts with nautical rope that satisfied the underwriting requirement in that particular case. Ended up being about $3,000. So it was an inexpensive way to help us provide some defensibility for all those stairs going down to the lake. But yeah, we want you to get a quote. If you don't like putting your info online, you can just call the 800 number on the website. Tell our reception team what county you're in within the U.S., and they'll connect you with the right person and go through the exercise. But I do want everybody to be, prepare yourself. It's should be a 15 to 30 minute phone call, and we want you to come with the tough questions for us to answer those for you.
Yeah. And I think I'm going to know the answer to this last question, Nick, but what's one piece of advice that you would give somebody in this space? The most valuable advice that you could give somebody right now?
So might do too. So the first one, obviously, to kind of keep it on brand is to take time on insurance. Really understand what you're getting into, the cost behind it, run your numbers. Very rarely do we see the additional cost of our specialty product is going to put you in a negative category revenue-wise. When we start breaking that down versus claims that would be covered across the retail market and our policy, using water damage as an example, we would pay that $50,000 claim. They would pay that $50,000 claim. But how is your revenue protected? They pay a fair market value of rents, which is the average of the long-term rental market in your area. We pay gross revenue for your actual business and that location. So we're not paying $2,500 a month on fair market value. Let's say we're paying $5,000, $6,000, $7,000 because that's what your property is generating in actual gross revenue. So that's part of what you're paying for and protecting. You're not just protecting the net income, you're protecting the gross revenue with us. So I think that's really important for folks to understand. I think the other side of this for vacation rental owners is whether you're doing this yourself, which a lot of folks are the RBO, where they don't have a professional property manager, invest in some technology. I actually brought it in here. I am not paid by these guys. I just love this little product. This is a whole home monitoring system in this little thing. It's costs around $1,000 to get your home set up. It monitors water, noise, carbon monoxide, smoke. It'll monitor your electrical system and everything and send you a health report. And also what could be the problem if there's like an electrical surge, where to check, where the water might be coming from. It's a cool little product. It's called Dwell Well. I just love them. And
Dwell
again,
Well.
Dwell Well. It's a shameless promotion because I
Not
want,
even shameless because you're not getting any money. That's
yeah,
what you call an
no,
authentic.
yeah. We work with a lot of vendors who are in the tech space, and this is the coolest one to come out in the last decade. And I love this thing. I tell everybody about it. You need to, there's 15 products to monitor your home that you can go and buy, or you can just buy one. I like just buying one and being done with it. So leveraging technology to help protect your home and risk management. And there's another tech company that does safety inspections, which is, I think everybody should get on board with, because every hotel in America is required to go through health and safety inspections before they can open. I'm not saying that that should be regulated, but I think everybody out there should look at a safety program that's available to them out in the US. Breezeway has the most comprehensive one. It's super inexpensive, and go through that checklist. And at the end of the day, if you do have a liability claim and you're insured with Proper, we're going to use that report at your defense, because you're going to go through your home and show that all these systems are working as they should. So leveraging technology for risk management and partnering with the right insurance vendor for your needs, those are the two best foundational points you can get to get off on a good start in this industry.
No, I appreciate that. And we actually had Breezeway on the show the other day. So that's
There you go. Justin Ford,
another
my
gentleman
guy.
who I really liked. And when we talked about safety, it was very, again, it's something we don't think about, but that we really need to have front of mind instead of back of mind.
Yeah. Yeah. I mean, every hotel has a risk manager that goes through with an insurance professional during their renewal to point out and show everything and check off the list. We have to do that ourselves in vacation rentals, and Breezeway made it easy. So that's awesome that you had them on. Justin Ford's a great partner, a great colleague, and great friend. I mean, he's been doing this for a long time.
I love that. Well, Nick, thank you so much for being on today. Appreciate it. Again, get insurance front of mind. Make sure that you understand the costs. And as always, thank you for listening to the show. Thanks, Nick.
Thanks, Rodman. Appreciate it.
Thank you for tuning in to this episode of the Vacation Property Secrets Podcast. If you enjoyed the show, we'd really appreciate it if you could leave a rating and a review on Apple Podcasts or Spotify. By leaving a review, you not only support the show, but you also help others find and enjoy it just like you did. Also, please share this episode with somebody who could benefit from it. And if you're aiming to build a short-term vacation rental investment business that's based on strong investment fundamentals and not just emotion, I'd love to invite you to a free training that I'm hosting. It's my financial forecasting for maximum vacation home profitability training, an on-demand video course that's completely free. It walks you through the investment fundamentals to build and scale your short-term vacation rental business. You'll also learn how to estimate investment income and your operating expenses to build a projected pro forma operating statement and the potential NOI and return on investment for your property. Just go to vacationpropertysecrets.com to get access to your free training. We'll see you next week for another episode of the Vacation Property Secrets Podcast.